All right, everybody, welcome back to another edition of Market Talks with Dr. Stoxx. It is the 27th of November, just the day before Thanksgiving, and everybody who is a professional trader has probably already left their desks today and they're on their way to the Hamptons or the Poconos or I don't know, the changing seasons up in the New England area, wherever they're going. They're probably not trading anymore. Volume is starting to come down. Prices, after a really nasty morning session, are starting to rise back up again. It was really a nasty sell off, which is pretty unusual on the day before Thanksgiving. We had some data come out this morning. We had durable goods orders. We had GDP come out. We had the PCE prices, that all important read on inflation that the Fed likes to key on when it makes its decisions regarding interest rates. And the PCE prices were in line. The durable goods orders was actually a bullish beat. The GDP was a bullish beat. So the data looked pretty good. But for whatever reason, the market decided to sell off in the morning and now is starting to bounce back slowly but surely here in the afternoon. We should see a good float up into the close today and some follow through on Friday after the Thursday break. That's usually what happens around Thanksgiving, and I don't see any difference this year as well. All right, so we're going to do a few things today together. First, I want to show you a couple of interesting charts. Let's get over to this weekly chart of Bitcoin. So everybody is excited about what Bitcoin is doing recently, right? Big three green sticks, boom, boom, boom. And that first green stick, which happened a month ago, was the breakout of a very wide and deep inverted head and shoulders pattern. And sometimes these come at the bottom of downtrends, in which case it's a reversal pattern. This one is coming at the top of an uptrend, in which case it is a continuation pattern. And there's a very easy way of figuring out where that pattern will complete once the price reaches its target. You take the depth of the head, right? So the depth of the head here starts around 15,000. We go straight up, perpendicular line to the neckline, and that's about 68. So 15 minus 68 is what? 53. We had 53 to the breakout point, which is, let's just round it off to 75. So 53 plus 75 is 120. Actually, I had 125. Looks more like it's 128, but it's in that range, right? 125, 128,000 for the price of Bitcoin. And it's currently only at 96. So that's a good 25 to 30% rally from here. How long will that take? Nobody knows. Most people who are interested in Bitcoin and who are up on these kinds of things, economists and political economists especially, who are telling us that the coming administration that will be sworn in on January 20th of this next year, that they are very, very pro crypto, pro Bitcoin, and that I think will give a good, healthy tailwind to Bitcoin. There's also some talk about making Bitcoin the currency standard in addition, or in the place of gold. If that happens, you're going to see the value of Bitcoin just go up and up and up. So a lot of people are loading up on Bitcoin. I personally have not. I've been in and out of Bitcoin. I've not I wish I could say I bought it down at 2000, right? With some people who didn't see that coming. I really did not. I just didn't understand it for a long time. But I am very bullish on Bitcoin now, and I think it's a good buy and hold position over the next couple of years. All right. So we're not long Bitcoin. We got long, we are long Bitcoin in our wealth building portfolio. We are long Coin, COIN, which is the premier exchange on which Bitcoin is traded. So if Bitcoin goes up in value, it's going to also go up in popularity. More and more people are going to want to buy Bitcoin. More and more people are going to be trading it through Coin, and they take all that commission, right? Just ching, 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 ching. So it's a very good moneymaker for them. And we want to be in Coin as a way of leveraging the move in Bitcoin. So coin can go up, Bitcoin can be flat, Bitcoin can go up a little bit, coin can go up a lot. So it's a good place to trade Bitcoin without actually buying Bitcoin. So here's the pattern, right? I hope you can see this. Your flagpole started down here at around 180, almost vertical rise, like a rocket ship, straight up to 334. That's a massive move. What is that? 150 points, but 150 point flagpole, and then it went into a nicely defined, clearly laid out flag pattern. You only need 5 bars for a flag pattern, and this probably, because of the strength of that move, I guess, is going to take a little more time to fill out before it breaks out to the upside. But the Technical Analysis 101 says that when this breaks that neckline at the top, what line is that there? It's about 333. If it closes above 333, it should, in theory, print another 150 point flagpole. So 333 plus 150, that's 480 something as your upside target. We're down here at 305. So we bought at 305 just a little bit ago, and we're going to hang on to it as long as the market will let us. Pretty easy to learn also where you should put your stop, because you just need to keep it below that support line of the flag. If that flag breaks down to the downside, then you'll know it's not a flag pattern, it's a top. And it's now rolling over and it's probably going to come down. So you get stopped out, you move on, and take your loss. And the upside here, though, is very, very good, very, very strong. So, and coin, I'll show you in Market Surge, my favorite scanning and analysis tool, right? I guess you can see all of that. So this is Coinbase. We've got a 99 comp rating. It doesn't get any better than that. It's got an A for timeliness rating. That's your technical strength. Doesn't get any better than that. A plus group. So anything related to Bitcoin is doing really, really well. And financial markets and financial exchanges are also doing really well. It has a B SMR. So that's not perfect, but it stands for sales growth, margins, and return on equity. And a B is fine. I'm okay with a B. A or B. I don't really trade anything that has a C or worse. And then look at this estimate forward estimate for EPS growth for this next year, 1,376. Doesn't get really much bigger than that. So coin is very, very well set up and shows some very good metrics per Market Surge. All right, so we're long coin. We also got long SPX, or the we actually bought the let me show you the E-mini futures contract for the S&P 500. Now on the daily basis, not something that I really like that much, right? We've got this straight shot up, pull back to the 21 period moving average, and now we're testing that same level, and this is where the market can often get into a bind, i.e. a double top, some weakness seen in the right test. We've got some bearish divergence working in. However, there is also a very good chance that this test, after a couple more tries perhaps, will break through out to the upside and we get the continuation of the upside move. That's just how markets work. They go up, they come back down to discount certain concerns or to catch up to valuation. They come down, they test support, and then they run back up to the former pivot high like it did right here. And it usually takes a few days to kind of bang against that door. And the more often you bang against the door, the more likely it is to open, break out to the upside. Not exactly praying that breakout, however. What I'm doing is I drill down to the hourly chart, looking for a short-term trade to get us through the rest of the week. And this is what we saw, right? Here's that morning sell-off, very sharp, heavy volume, big flush out all the way down to 6,000. Nice round number. Now, the SPX itself was below 6,000 at that point, has rallied back up to 6,000. That's where it is now. But it was this 3-bar reversal on the hourly chart after a big flush out move in an uptrending LRC. This is the linear regression channel. And we're down here. The pink zone is the 2.0 standard deviation. Typically, when prices get down to the pink zone of an uptrending LRC, they bounce quite sharply. And that's what we're looking for here. Looking for a bounce the rest of the afternoon, looking for a hold and a bit of floating up on Friday. And then we'll see where we're at Friday afternoon before the close. The close is 1 o'clock in the afternoon, Eastern Standard Time. So it's a short day. We still don't have a whole lot of time to see this through. But if it looks strong on Friday and if the volume is okay, then we'll probably hold over the weekend and get out sometime early next week. So 3-bar reversal, down, red. Reversal bar is your hammer candle. Back up on the upside for a green bar. That's your 3-bar reversal. It's a classic candlestick formation, and it is one of the most bullish candlestick formations out there. And you'll find the same thing on the top, flagging a reversal to the downside. Here's your 3-bar reversal on the opposite direction. Green bar up, big flush out, coming back down to give you your reversal bar, and then a red bar to confirm the top there, and it was all downhill from there. All right. So we're along MES. We're along a Bitcoin play with coin. What else was it going to do today? All right. So before I go and look at the mags, the only other index I think we need to worry about is the NASDAQ. This is the hourly chart. You can see the flush out. There's a good, very strong, well-developed trend line that tagged right around 20,675. You can see it tagged it here, and it tagged it here, and it tagged it here, and every time it tags, it bounces right back up again. If you had been watching the hourly chart and had that line in place, which is very easily done, right? You just see where the pivot points are and put a line under them. You could have bought that low this morning, very low risk. Now, I wasn't actually looking at NASDAQ at this time. I had other stocks and indexes I was looking at, but that's a nice trade. So you find your support trend line where the price comes down, pivots, rallies back up again, and does it again and again. And you can see if you draw a trend line underneath, that's not even where it starts. Here's some more pivot points. It starts way, way back there. I won't go all into that. But you could have bought that low, and you would be nicely profitable right now. All right. So let's take a look at two sites I want to show you real quick. I have showed you this before. TrendSpider, very good service. Highly recommend it. I used to be a partner. I just haven't been able to use their software. It still features prominently in my webinar, the pullback system. If you go to my site, drstoxx.com, DRSTOXX, and click on the webinar tab, you'll see the pullback system, and you'll get a free month to TrendSpider, which you'll learn how to program the software so that it will show you both bullish and bearish pullbacks. You'll get notifications that pop up on your laptop. You'll get email. You'll get SMS, and it will tell you exactly when the trades are firing off, long and short. And you can do that on the 1-minute chart. You can do that on the 1-month chart, and everything in between. All right. So one feature about the TrendSpider is that I really like is that it has these canned or pre-built screening tools, and with a click of the mouse, you get a set of stocks that satisfy certain technical. You can also put in fundamental parameters. Two that I really like a lot. One we looked at last time, which is the recent power gap. Power gap is when the stock gaps up several percentage points to a new 52-week high. That's not when you buy it. You got to wait a week or 2 weeks for it to kind of settle down and it forms a pattern. Then you trade that pattern. But it is one of the most bullish setups in technical analysis, this power gap. The other thing I like, the other screen I like, I'm going to show you now, is the 10% pullback after a 20% rally. Very simple, right? The stock goes up 20% and then pulls back a 50% retracement of that to hit a 10% level. And if you get a good reversal bar with volume on that reversal pivot, then you can buy the stock on a pullback. I love trading pullbacks. It was the very first technical system I learned. I have my own version of it. It's in my book, Trend Trading for a Living. It's in the webinar on the drstoxx.com site. It is, I call it my bread and butter setup. I love it. So here's a scan. This isn't going to give you exactly the same parameters that I use, but it's pretty good, pretty close. So you click on that scan, you hit the scan button, and then it will pull up a up-to-date real-time list of stocks that satisfy that 20% up, 10% back. Let's just see what's on this list. Now, there are some like low price stocks on here, and you can fiddle with the scan itself. You can add a couple of parameters to keep out low price stocks, to keep out illiquid stocks. I didn't do that. I just have run it the way it is. But let's look at a few. POWL, right? So here's your 20% or more rally. Really, that's more like a 150% rally, frankly. And then your 10% pullback, which is a little bit more than that. So I'm not exactly sure how they're figuring it. Maybe 20% or more on the rally, 10% or more on the pullback. Maybe that's what they're looking at. Now, this isn't ready to go. It gave a nice little buy signal there, but the volume wasn't very good. So we're kind of waiting for a green bar on bigger volume than the day before, and preferably the biggest volume we've had in the last 10 sessions, right? That's called a pocket pivot setup. And if you get that on a pullback like this, man, mortgage the house, sell the car, and put every dollar you have into that, because that's a really strong bullish setup. AMSC, don't know this company, Superconductor Corporation. I've heard the symbol. I know the symbol, but I don't know the company. Anyway, here's your rally. I assume this is the 10% pullback. It got off to a nice start. There's a decent buy signal on that bar right there. And then another little more pullback, because we've had some, especially in tech stocks this week, we've had some softness, some weakness that I frankly didn't expect, but it is what it is, right? We can only trade the market we're given, not the market that we want. All right, just wanted to show you that in a couple of ways to trade it. One last site I'll show you, and I don't think I've showed this to you before. It's called Chartmill. Chartmill to me is a little too complicated. It's not very user-friendly as far as I'm concerned, but it does have some really interesting features, and there are some ways that you can, there are some of my favorite setups in here. For example, I was just mentioning the pocket pivot. Well, I have oops, that's not what I want. I have a scan that I built into Chartmill that looks only for pocket pivots. So you actually have the setup right there, pocket pivot, already programmed into the software. I'm looking for stocks above $20 per share, 1 million shares per day. The 50 SMA is above the 200, so it's in a longer term uptrend. And it's a stock or ETF. It's not some sort of strange foreign thing. And so when you run this scan, you get 10 results. Now, here's the problem, and this is something I don't understand about Chartmill. I have everything set up here, and then when I go to look at the charts, let's view this by chart. I'm kind of having trouble finding where the pocket pivot is. Well, I guess, no, this is a pocket pivot on today. So this is a pocket pivot that's just happening today. That was my confusion. I was looking actually, for previous bars where the pocket pivot was. And no, the pocket pivot is today. So here you can see pullback, right? Here's your pocket pivot on that bar right there. It's a green bar. The volume is huge, and it's much bigger than the last 10 days at least, pushing off the support. That's a pretty good setup, actually quite a good setup. The only problem is it's in a stock we can't really trade because it's on some foreign exchange. So we've got, I don't know what L stands for. Tesco is, I think these are British stocks, right? Tesco is the British grocery chain. There's a nice looking pocket pivot right there. Good volume, highest volume in more than 10 sessions, pushing off of support after a pullback, but we can't trade it because it's a British stock. I don't know what that one is or that one. That's a Canadian. This is actually Shopify, right? So Shopify we can trade on the American exchange. And here's your volume bar. Here's your green bar. It's almost ready to break out above 160. This is also a power gap. Here's your power gap, which I think was on earnings or maybe on the election, your little pullback, and then you could have bought on that first green bar after the pullback, or big volume bar, which was 2 days later. And today, a confirming volume bar. So Shopify looks ready to go. It's probably not going to get below 145, which is the gap support. And 160 looks like it's a done deal. And this could be up at 200 by the time we get out to the end of the year. That looks very good. Very strong chart. Really back in favor with the market after being out of favor for a number of months. Yeah, that's a good one. That's a gold play. We can play this one. This is, no, that's not a gold play. I mean, IAG, an American exchange, is a gold play. This is an airline. So that's, and I can't figure out how to weed these non-American stocks out. If anyone has an answer to that problem, let me know. But I just wanted to show you, I think it's quite cool. The other thing I like about this is that if you go over to, where is it now? Trading Ideas. You go to Trading Ideas, and there are a long list of pre-programmed screening tools in Chartmill, and you can weed out the ones that you don't really want to look at and have a small set of ones that you do want to look at. So you can focus on long only. You can focus on, say, swing trading and maybe momentum. Put in those three, and we've got 146 screens to choose from. A little too much, right? A little too much variety there. But so maybe we put in a few more parameters, but that's interesting. So when you get down to, let's say, bull flags, you run the bull flag, and you've got 7-day results. You can fiddle with some of the parameters that are up there on the board. You can see them. You fiddle with those. You put in a higher. They're going to ask you to join. And it's actually pretty cheap, right? $16 a month. You can raise the volume. You can raise the price. You can put in some performance data. So maybe you kind of want it to be up at least 30% over the last year. You can put in fundamental data. So if you're looking for a big growth play, you can put that in. And then you're not going to have 70 results. You're going to have 15 or 20. So let's see. These are bull flags, right? Nice. I don't know if we can trade BMPS, but I like that setup, right? Here's your power gap. Here's your pullback. You've got a bull flag forming. You're at the top of the bull flag. Looks to me like you're ready to break out. You've got some good volume in there as well. Yeah, here's nice bull flag on Marvel. That's that one we can trade, Marvel. And it's down there at the bottom of the bull flag, so that's even maybe a little better, takes a little bit of the risk out of it. There's a financial play ready to go. FAST Fastenal almost got our live room members into this one this morning, but it wasn't behaving very well along with the rest of the market. Jets is a ETF of airline stocks. That looks pretty good, right? Power gap, pullback, flag, banging on the top of the flag, ready for the breakout. All right, so just to let you know that tool is out there, you can use it if you play around with it. If you come up with a screen that you really like, please share it with me in the live room so that we all can learn from your work. All right, let's go back to charts. We'll take a quick look at the magnificent stocks. Sorry, I've got this itchy nose because I need to shave. The whiskers are tickling the bottom of my nose. All right, let's open up the mags list. There it is. All right, let's do worst to best. Micron Technology. Let's go back to our daily chart. That's not a daily chart. There it is. Okay, so Micron is a no-go zone, right? It broke out below support, rallied back up, rolled back over, back down below support. We're below the midline of the LRC. The 21 has crossed over the 50. The 50 is below the 200. The LRC is down, falling. We've got almost overbought stochastics. It's just a disaster right now. And I'm sad to say that we were long MU for a couple of weeks with our diagonal debit spread. We were selling premium on this one because it seemed to me like it was stuck in a pretty tight trading range and would continue to kind of bounce back up and down. We could sell some premium on that. And then it just kept going below our long put. CRM, breakout, double top, bearish divergence, back down to the 21, the midline, or the former resistance line. All of those are possible on this pullback. Keep an eye on it, though. This is, of course, the big blue chip customer management software firm with AI and cloud spaces. And you want to be long this one, but let's wait until it comes back in so we don't have to sit through a $10 to $15 drawdown. Avgo, Broadcom, down into the pink zone of the uptrending LRC. Is this a buy? No. Not yet. Not yet. So here's the problem with this chart. It did have a minor, I would have to call this a minor supporting trend line, and I'm not even sure I've got the line in the right spot there, but it is a short-term, near-term supporting trend line that broke. Now, when these trend lines break, they usually stay below that line for a while and until things get sorted out. Volume balance also not very good. There's been a lot of people getting out of this stock, distributing shares, selling them back to the market. It's not in favor right now, but we are at 2.0 standard deviation. It is still in an uptrend. Yeah, the 21 is over the 50, but the 200 is rising. The 50 is above the 200. I suspect this is going to have to come down and test 152, the 200 period moving average in the next week or so, especially if December is I think it might be, a bit weak on the front end. Heavy, good on the back end, weak on the front end. Avgo then is just a wait and see. But keep an eye on it because it's a potential reversal. What you want to see is a green bar on bigger volume than the day before. That would be our buy signal. ARM, one of my favorite IPOs for a long time, and then it just could not get going, right? It got up to the blue zone, and it's just been downtrending ever since. And it's not a sharp downtrend. It will probably have its day of favor again, but not right now, not as a long. It is right now actually setting up as a short. It got up to the 21 period moving average, tagged the 50 period moving average almost, tagged the resistance trend line, gave us a 3-bar reversal. So here's your green bar up, your reversal bar, your red bar down, and follow through today. Not a good look. Probably going to come down and test 120 or so. Adobe, not really one I would want to trade. It's not a good trading stock, and it's an ugly chart. This is just ugly, 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 ugly. How many uglies can we have? So I wouldn't even touch it until earnings anyway. Maybe things can get back on track. NVIDIA, everybody's been watching NVIDIA this week because it's just down, 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 down. 5 red bars in a row. We had one little reprieve yesterday, and it sucked in a lot of new longs, and then it was a gap down and a really heavy selling pressure this morning, until we got that reversal. We got the reversal right around noon or so, and it's been bouncing back up. And I did make mention in the room that yellow box right there is a strong volume shelf. There's some good support in that area right there. It used to be resistance, then it became support, and now it's support again, being tested again after a higher high, which is always a good thing. So this, to me, looks like we may want to get long NVIDIA before the close of trading today. We may. It's not exactly the way I typically like to buy a pullback like this on a green bar with really good volume, better than the day before. I don't think we're going to get good volume today because of the holiday coming up tomorrow. But just from a pure price basis, this is a low risk trade. You put a stop below today's pivot low, and your target is up here about 150. I'm going to mark that with a green because I kind of like that one. So we tried Tesla this morning. We got stopped out on the big flush out. Everything was just going south, and it was a pretty good setup, I have to say. Kind of that's what it looked like when we got in. And it gapped up this morning, and it's continued a little higher initially, and then it was just all downhill with the rest of the market. So still a decent setup, but I don't think there's some headwinds now with Tesla. The EV tax break is gone, and I think it's starting to price that in. Tariffs, China problems, and so on. AMD has been a no-go zone for a long time. It's still a no-go zone. Everything is down and just not looking very good. Facebook is still below resistance. I said yesterday that while it is green and up, it's right at the 50-period moving average. It is below the supporting trend line, and that's a pretty well-established one. Doesn't look like a good setup to me. In fact, it's looking more and more like a bear flag. There's your bear flag. Here's your move down, flag, and next move should be down again. Now, it won't do that if the market is starting to rebound here, if the techs and the mags are starting to rebound, but we're not yet seeing confirmation of that today. NVIDIA is our first green shoot of hope. Let's focus on that. Let's not worry about these other stocks that still don't look very good. Microsoft, yesterday, big green stick all the way up to the resistance trend line, gapped back down today, can't get back up above the open. Is it, as long as it stays above the 50-period moving average, it has a pretty good chance of building a little coil in this area and then breaking out to the upside. Are there better setups out there? Absolutely. We've seen already quite a few of them, like Coin, for example. But Microsoft is Microsoft, and sooner or later, we can't count it out, sooner or later, that's going to break out, that pattern. It's probably going to be to the upside, and you're going to see a good run up to 450 or so. Not by the end of the year, but I think maybe in the end of the first quarter. Amazon was looking really good, really strong. Then it had this gap down, and a gap down after 52-week highs is a deal killer. Typically ends the trend. We did have a pullback midline above the 50, below the 21, rally back up sharply yesterday, and then, like everything else, not doing so well today. However, it's up at the top of the top quarter of that big green stick, and it is it? I would say it's right at gap resistance, and a gap resistance after a 52-week high is very strong. So I doubt it's going to have much traction going forward, but we'll keep an eye on it, because then, if it can get and close the gap, then it's off to the races from there. Qualcomm, not even going to look at it. It's too ugly. Little dead cat bounce in Google. Still don't like it. Apple has surprised me, because when it was down here and the market was up at all-time highs, Apple was just down here in the doldrums, doing nothing. Up, down, up, down, up, down for several days on end. And then all of a sudden, boom, it sneaked out above the 50, rallied higher sharply for 3 days, and is doing it pretty well today, all things considered. Now, it's got to get back up above this very firm high right there, and I'm pretty sure I'm right in saying that with all the splits adjusted, that is an all-time high. So it's just about ready to tag that. The third time you knock on the door tends to not open. What then typically happens is you get a little shallow pullback, like a little cup, or handle, I should say, a little handle on the cup. And then you get the breakout on the fourth try. So that's probably going to happen here. So I don't think I would buy this in anticipation of a breakout. It's probably going to come back in here, test the midline again, maybe by the end of December, and then we can get on board for a good run in the first quarter of next year. Netflix, it was up and up and up, big red deal-killing spike down lower. That usually takes a little while to fix, right? Because that's a big slam. However, you can drill down on something like this to the hourly chart. Here you've got a 3-bar reversal. You've let's call it a 4-bar reversal. Big slam down, the flush out bar, little tiny reversal bar, and then the big reversal back up. That was a couple hours ago. Out of the pink zone, uptrending LRC. The hourly chart looks good. So on Netflix, I would play this per the hourly chart, rather than looking at the long-term view, because the long-term view is going to get you caught up in, you could really get flushed out quickly on another big red stick like that one. So play this with the hourly chart, put your stop underneath the previous hour's low, trail it up as the market allows. Your target is going to be up here around 900. Not a big trade, right? 20 points on an $800 stock is not 2.5%, something like that. So not a big trade, but you can leverage that with some out of the money calls. Buy some maybe some 1,000 calls for the December regular expiration. Probably cost you $5 or $6, and those should do pretty well. You're not going to get 2.5% on those. You'll get 20% or more. So yeah, but I wouldn't try to hold it much past 900, 905. All right, guys, that's all I've got. I'm going to end the video here, and then I'll jump over to Discord and see what stocks you'd like me to look at. We'll do those together, and then we'll call it a day. God bless everybody. See you back in the room in just a little bit.